What's up, YouTube fam? Welcome back to the channel. In this episode, we're going to talk about why 90% of people who sell options will probably end up losing money and how you can avoid that too, right? Because the thing is, option selling is definitely a ticking time bomb the way a lot of people are doing it, the way I've even been doing it in ways. And I'm going to discuss how and why and how you can just basically avoid that, right? So with that being said, if you guys are looking at my positions, you see that I'm out of the MSTX play and into the SMCI play. When looking at what actually happened with the MSTX play, so I am curious and I'm going to come to you guys for an answer. So basically, I sold the MSTX play for $227 on top of a $45 credit and then bought it back for $190. So I'm curious to hear from your guys' perspective, what is the net gain and loss on this topic? You know, we've discussed it. I've used ChatGPT, the paid version, but I want to hear in the comments what you guys think is the net gain / loss on MSTX. This is everything from the position. Again, sell for $227, buy for roll for a $45 credit, and then buy back for $190. I already have my opinion and what I think it is and what ChatGPT thinks it is, but I'm curious to hear again what you guys think in the comments. So let me know. But the reason why I closed that, it wasn't because I didn't think MSTX still looked bullish. I still think it looks very good. It was because of the fact that I was only going to get $190 more, right? Because again, remember, your gains are capped when you are selling options. So in this case, to me, I was like, my option is still deep in the money. I can only collect 190 more, but here I can get an SMCI put, right, which is relatively deep out of the money. Let's see. Let's just pull up the SMCI chart. I actually did make some new watch lists, so I don't know why they're not showing. But yeah, so my SMCI put is right here at 31. So deep out of the money, you know, pretty good setup. Looks like it's even bottoming out. Ultimately, the point is with option selling, there's no point in, you know, trying to get the full profit, right? I think that's one of the things that makes option selling great. I know I'm going to get into why most people lose money selling options, but I think one of the things that makes it great is like, I don't have to sit there and think like, oh, if I hold this, because I do think MSTX will ultimately, you know, recover along with CONL. But I was just like, you know, obviously Friday was an incredible day, but I was just like, I can't buy any other options with it right now. Obviously everything that happened with the dividend, I was like, for $190 more, there's just literally no point because I'm already deep in the money. And, you know, listen, it's a great day. It bounced high, but it could easily come back down. I don't think it will. I do think it's bullish. I think there's a lot of, you know, indicators that are, you know, reasons why we'll get to at least, you know, towards these levels. But ultimately, I was just like, what's the point of holding something that went through all this chaos for an extra $190 when I can get something that, you know, looks a little more promising, better strike price, out of the money for roughly the same. So that's one of the benefits. And I think that's one of the cons as well. And I think that's what leads to implosion, right? Is like, if we look at where this account actually got, at one point it was reflecting 19.1, but just like that, we're back to 22.3. And I think a lot of people just aren't, you know, they're not ready for that type of volatility, right? Like what got me from 20,000 to 25.2 so quickly was that I was selling options on volatile stocks. Now, with that in mind, you got to consider the fact that your gains are capped on each individual play. So you're making 200, 300, 200, 300, you know, 600. But then you take a big loss that does all of this, that wipes out 5,000, 6,000. I don't think a lot of people are able to handle that right now. Obviously, since I was rolling and I, you know, still believed in my positions, I didn't lose anything. But if you're not convicted in your plays and you don't really know what you're doing and you just keep, you know, feeling like you're buying the top and then closing for a loss, you're going to lose money because eventually, yeah, there is going to be a position that wipes out lots of profits. But if you manage it right, you can get back, you know, if not all of it, a lot of it, right? And that's why with the MSTX play, you know, when I had the opportunity to get out for, you know, at one point I was down like probably 600-700 on that position. So probably even more. I really don't even remember. But when I saw the possibility to get out for what to me looked like a profit, again, there's still debates over the topic. ChatGPT says that the gain was for $82, but I was just like, to me, that's a win because I can only make 190 more. There's no point in tying up $6,000 for that, right? And I can't even sell more options on it, right? Because I would consider that, or I would even consider buying. Like, believe me, there's a side of me that wants to just buy, just buy shares of this, because I do believe it can produce a 60-70% return quickly. Again, I'm not telling you to go ahead and do it. I'm just saying there's a side of me that likes it. CONL as well. CONL, it covered, perfectly, basically flipped, resistance and turned it right into demand, right? It basically flipped support, turned it into demand, higher time frame. But, I want you guys to see a live look at why these leverage indexes are so dangerous. So notice how Coinbase, it's the same concept, right? But look at these highs over in March for Coinbase, and notice how it cleared it. Now, if we look at the highs on CONL, you notice how it didn't clear it. So that's just a live look at how dangerous the decay is and how it compounds over time. And that's why it's like with these leverage indexes, you do want to buy them at times. Like right now, it looks like a good buy to me. Everything is flashing it. The market cipher indicator is flashing it. The support is flashing it. It just looks good, right? It looks like it's going to test some new support. So again, it's not that I'm buying it right now. It's just I'm pointing out the fact that, like, even if you could sell options on MSTX, or if CONL had weeklies, right? Like CONL, it has monthlies, which is why it's like not appealing, because I'm already rolling it. Due to the fact that I didn't acknowledge that it had monthlies. And to be completely honest with you, these premiums are good. Like, these are very, very solid premiums. Like, I could take, let's say, this is the type of play I would consider. I'd consider any of these, truthfully. I'd probably go even lower in delta, like, under 30 on something like this, because it's so volatile. But these are great premiums. So ultimately, yeah, I do like the position, right? I do like selling options on it. But again, since there's only monthlies, it's a little different because you can't really roll. I did roll, but it is a little annoying only having that option. So again, I was just covering what basically what I'm trying to say is, like, when it comes to the world of selling options, it's the simple fact that, in a lot of ways, you could have just bought the stock, rode it 60-70%, obviously with these volatile indexes. And the reason why I'm covering them is because a lot of people have been trading them and selling options on them. And I do see the benefit. Don't get me wrong. You can make a lot of money, but at the same time, you're also losing a lot, right? Because you're not getting this 40%, run. But at the same time, you're dealing through all of this. Now, obviously, having the ability to roll and do certain things is what makes it appealing for people like us, is because we can really protect our downside. But again, with that being said, sometimes you really do need to capitalize on the upside. And option selling, it doesn't, the trade-off, right, is that you're never going to have this huge win for the fact that you're going to win majority of the trades. And that's why I don't really like selling in the money options, in the money puts, because to me, like, the whole point of selling puts in essence is to get a lower price, lower entry. So to me, that's how you're going to win, right? You're going to win, in my opinion, by selling out of the money a lot more than selling in the money, because of the fact that, like, okay, yes, intrinsic and extrinsic value will give you more profit if it's, in terms of that strike, but at the same time, you're not going to be able to ride, 40% like this. It just, to me, if I was going to go for selling in the money puts, I would just buy the stock, truthfully. Now, I see you can still roll in the money, but again, it's just, for me, it doesn't make sense. I think there's better ways to go about it. I do see the benefits to it. I do see the value behind it. But, in the world of speculation, sometimes you have to just buy, right? Sometimes it's just better to buy. There's no better way to put it. Like, there's plenty of stocks that, you can look into where they just ride up. One that we've discussed plenty of times is Reddit, right? It's like, look at how much this is flowing. Now, again, I'm not sitting here and telling you guys to put your whole money into any of these stocks. It's more of just pointing out that there are reasons why most people don't sell options, right? And when you think, oh, it sounds too good to be true, the reality is, it's not that it's too good to be true. There's a trade-off. And the trade-off is the simple fact that, you're going to take tons of wins to get this, right? It took me, it didn't take so much. Oh, this is wrong year. But it didn't take so much, a couple months to get up here. And it only took, so think about it, right? It took from November 7th to December 16th. So a month and a week. And then from December 16th to 30th. So it took about half as much to kill it as it did to build it. Now, obviously, if it recovers right away and it'll continue up, then I'll be very happy. And a lot of it was my fault. It was mistakes I made, right? But you know, a main reason also why people are going to lose selling options is because of they would panic, right? They would chase something like CONL or MSTX and get out at the first sight of bad news, right? That dividend brought so many questions, but it still wasn't enough for me to just panic sell, right? I still had conviction in the play, and ultimately was able to save it and make it not a big deal, right? Basically nothing. Now this CONL play, the same thing, you know. Now there wasn't as bad news. There was really nothing that happened with Coinbase. It was just a market shakeout. And ultimately, CONL is still coupled with Coinbase as opposed to MSTX, which obviously decoupled from MSTR. But again, it's really just not panic selling, knowing that you're playing with fire, right? When you're playing with these leverage ETFs, you are playing with fire. Now you are getting high premiums, but my point is, like, if you never actually end up buying, to me, I question if it's worth it, only due to the fact that they are so volatile that, you know, you almost need to get that 25% gain in a day. Like that's what MSTX did, right? As you see right here, 25% in just one day. And it's like, you know, that's a month and a half's worth of gains, and you're getting that in one day, right? So my point is, like, when it comes to selling puts and trading options and selling options, ultimately, I do think you have to have the plan to eventually buy the stock. And I think the best way to do it would be, it's like almost like if you can follow it down, like imagine this is your strike price and you roll it and you just keep rolling. And then by the time, let's just say this gets here, you know, right now my rolling price is like 50. So it looks like it could time out perfectly for what I'm trying to accomplish. I honestly might even be too low and too soon, being that, you know, it's for January 17th. But my point is, like, you almost want it to expire right here. You're like, everything's climbing, it expires right below, you collect your premium, and then, you know, you let it ride to a take profit of like up here, and then you sell covered calls with this strike, or you just get out, right? And I think that's ultimately the best way and most efficient way to sell options. I think everything else is going to be very difficult for a lot of people, just because the cash flow is just not as good as the gains of holding a lot of the time, right? I think it's better than a lot of other strategies, and I think you're a lot more likely to win selling options than you are, you know, buying options, right? But the point is, for a lot of people, you know, that aren't necessarily market experts. And now I'll say this, I've spent a lot of time studying the markets, which is why I'm comfortable doing what I'm doing and handling the volatility and, you know, playing these types of stocks, selling options, and like I said, ultimately trying to roll lower and be able to get a better entry. Like this is a play, you know, selling puts is almost better for you when the play goes against you, because, and this is why I love selling puts. I guess this will be the final thought, is like the reason why I love selling puts is because it actually is better when it goes against you, as long as it's a stock that you're okay with, right, and comfortable with. So these indexes, I'm not, you know, I understand the decay, and I think that's why rolling is so good, is because you can keep rolling lower. Now, obviously, being that CONL only has monthlies, that's kind of what turned me off to it. But at this point, my dream is to get assigned right below my strike. If that doesn't happen, then I'll probably just consider what I'm going to do. Ultimately, I wouldn't mind if it got above the strike, right, and I was able to expire out of the money, because then I'm just collecting this $4,000, and my account will be back at 26.2 or whatever it shows here, right, 26.3, which would be incredible, right? That would mean we're at that from the starting date of November 6th. So that would mean in 2 months we're up 6,300. Yeah, I would have no complaints with that, because we played with fire. We avoided a, you know, true storm, right? And I don't think most people are equipped to avoid that storm. I don't think the gains of selling options for most people, like, I just don't think they're equipped to be able to handle it. Like, yes, they're going to collect some good premiums and win, but when something like what I've dealt with happens, there's a much better chance they end up just taking a big loss, right? Something like right here at 19.1, and, you know, now they're starting their account from less equity, which allows them less collateral to put on positions. So I wanted to put a little fear into you guys on a winter Saturday. I'm out in New York. It's, you know, cloudy, gloomy, so I wanted to come with those vibes. I hope you guys enjoyed this video. I hope you learned a lot. If you did, please make sure to leave a comment, make sure to like, make sure to subscribe, show some love, join the Discord, and I'll see you guys in there, and I'll see you guys in the next video.